Welcome to US Tax Unpacked. Today we're unpacking one of the most talked about provisions in US tax law right now, the brand new No Tax on Tips Act. It's a landmark change, and whether you're a waiter, a hairstylist, a streamer on Twitch, or an influencer on TikTok, this law could put more money back in your pocket. Let's break down exactly what it means, who qualifies, and what to watch out for. What is the act? This act was signed into law on Independence Day, 2025. It lets you deduct up to $25,000 in tip income from your federal taxes. It applies retroactively for the 2025 tax year and will run until the end of 2028, unless Congress decides to extend it further. Why did this law pass? The law was introduced to increase take-home pay for America's tipped workers. With millions of people in the service economy and the digital creator space relying on tips, the government wanted a way to reduce tax burdens for mid-income workers. Politically, it's also about appealing to service staff and young creators who make up a growing part of the workforce. So, who actually qualifies? First, there's an income cap, $150,000 if you file alone, or $300,000 if you're filing jointly. Second, your occupation must be on the Treasury's list of roughly 68 qualifying jobs, which range from bar staff and beauty professionals to online creators and podcasters. And importantly, you can only deduct tips you've reported. Unreported cash tips don't suddenly become tax-free. For creators and influencers, this is big news. Tips from your followers, whether it's Twitch bits, YouTube super chats, or TikTok gifts, are now deductible up to $25,000. That could mean thousands in savings for mid-level creators who depend on tips as a major income stream. For top-tier influencers making millions, the deduction is less significant. But for the majority, this is meaningful relief. There are a few caveats, though. The deduction currently focuses on cash and reported tips. How credit card and digital app tips will be treated is still unclear. The IRS is due to issue detailed guidance in October. Also, not all occupations will qualify if they're considered a specified service, trade, or business. And finally, this law is temporary. It runs through 2028 unless Congress renews it. So what should you do now? Start keeping clear records of all your tips. Check if your job is on the Treasury's qualifying list. We have a downloadable list in description that you can refer to. If your income is under the threshold, you're in line for real savings. And above all, keep an eye out for IRS guidance this fall. So to recap, the deduction covers up to $25,000 in tips, applies to a wide range of workers, including influencers, has income caps, and is currently time limited. The key is record keeping and following IRS updates. Thanks for watching. At US Tax Unpacked, we help you make sense of tax changes that affect your life and your work. If this video helped you, subscribe, like, and share so you don't miss the next big update.